Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohan R. Pingrai, practicing chartered accountant based in Mumbai. Also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to video series What Law Says. And today we are going to discuss case laws under direct tax reported to ITAT and High Court. And today is part 12. So let's dive into it. Let me allow to share my screen. What law says? Case laws reported to ITAT and High Court under Income Tax. And today is part 12. Stay tuned till the end of the video because at the end we will discuss one-liner conclusions that can be drawn from today's learning. So let's start. Today's first case. Nanasaheb Bhagwan's Sasar versus ITO Pune 2025. Relevant assessment year is 2022-23 and date of order is 22nd September 2025. Relevant section is section 199. Read with Rule 37BA. Let's understand facts and issue of the case. Assessee and his son jointly owned ancestral land and sold it for rupees 13 crore. Buyer deducted TDS of rupees 13 lakhs under section 194A but reflected the entire TDS in assessee's form 26AS. Assessee filed belated return under section 139 subsection 4 claimed full TDS credit despite reporting only his 50% share of income. Very interesting. So, assessing officer issued defective notice due to mismatch in gross receipts, subsequently denied proportionate TDS credit for half share. Rectification under section 154 was passed and CIT appeals upheld what denial of full credit. So issue was whether the assessee is entitled to entire TDS credit shown in his form 26 as despite being only a 50% owner, where deductor erroneously credited full TDS in his name. Very, very interesting. Let's see what tribunal observed and held. Undisputedly, deductor's error caused full TDS to be reflected against assessee's PAN. Procedural lapses by the deductor cannot defeat substantive right to TDS credit. Very important. What is held by tribunal and observed is procedural lapses. Procedural lapses by the whom deductor cannot defeat substantive right to TDS credit. Revenue cannot enrich itself at the cost of the assessee. Reliance on IGET Infrastructure Management Services Limited and similar precedents directs AO to verify the deposit TDS into the government account and if verified, grant full credit of rupees 13 lakh. So it set aside the CIT appeals order and restores matter to AO for fresh adjudication. So outcome was assessee entitled to entire TDS credit in his name due to deductor's error. Okay, very, very important. Means at the cost of the deductor's gross mistake, the deductee cannot be held liable. So it is in the favor of the assessee. Next, Mahabir versus ITO, Delhi 2025. Relevant assessment year is 2013-14. Date of order is 15th October 2025 and relevant section is section 2, subsection 14. Let's understand facts and issue of the case. Case concern interpretation of section 2 subsection 14, definition of what? Capital asset with reference to land sale and municipal limits. Tribunal noted that the expansion of municipal limits after relevant notification date is irrelevant. What tribunal noted is that expansion of municipal limits after Relevant notification date is irrelevant. So issue was whether for determining if land is a capital asset, the subsequent expansion of municipal limits after the issuance of a notification has any effect or not. So let's see what tribunal observed and held. The relevant metric is the status of land relative to municipal limits at the time of sale and notification date. At the time of sale and notification date, subsequent extension of limit is irrelevant unless a new notification specifically alters limits affecting that land. So expansion of municipal limits after the issuance of notification doesn't affect the status of the land for defining the capital asset under section 2 subsection 14. Therefore, the outcome clarifies temporal applicability of municipal limits for capital asset classification. Next, DCIT versus Southeastern Coalfields Limited, Raipur, 2025. Relevant assessment year is 2013-14. Date of order is 19th September 2025. And relevant section is 201-2011E. Let's understand facts and issue of the case. A batch of 27 appeals filed against orders under section 201, 201(1)(a), assessee in default for non-deduction of TDS. Grounds involved remand by CIT appeals to AO for what? Fresh verification on certain issues. Issue was whether the first appellate authority, that is CIT appeals, has jurisdiction to remand issues for fresh adjudication where the order appealed against is not passed under section 144, that is ex parte. So let's see what tribunal observed and held. Amended section 251 subsection 1 clause A with effect from 1st October 2024 restrict remand powers where the assessment order was passed otherwise than under section 144. CIT appeals cannot remand issues for the verification. So reliance on Supreme Court principle that if statute prescribes a mode, it must be followed. Direction or remand by first appellate authority to AO for fresh verification is without jurisdiction if the appealed order was not under section 144. So outcome was upholds the statutory limits on remand powers of CIT appeals under section 251 subsection 1 clause E. Next, Jayshree Gopalji Haveli Charitable Trust-Ujalvav versus CIT Ahmedabad. Assessment year not applicable. Date of order 28th October 2025 and relevant section is section 80G. Let's understand facts and issue of the case. Trust applied for approval under section 80G subsection 5, that is donations deductible. CIT denied the approval due to what? Religious worded objects in trust deed. So issue was whether mere existence of religious worded objects in trust deed is a valid ground to deny section 80G approval. Very interesting, very interesting. Please note down. So what tribunal observed and held is that objects with spiritual or cultural undertones do not by themselves make trust religious. Object with spiritual or cultural do not themselves make trust religious. Section 80G 5B permits up to 5% of total income to be spent on religious activities without affecting charitable status. Critical factor is what actual expenditure is on religious purposes over the threshold. Mere wording of object is not enough to refuse the approval. So the approval must be given. CIT must find actual expenses exceeding 5% under section 80G subsection 5B. Matter remanded for CIT to verify and record findings on actual expenditure. Outcome was tribunal restores case for fresh consideration on merits. Next. Shamkris Charity Foundation versus CIT Mumbai 2025. Relevant assessment year is 2025-26. Date of order is 27th October 2025. Relevant section is 12AB. Very recent case law and very relevant means recent assessment year or so, assessment year 2025-26. Let's understand facts and issue of the case. Trust applied for registration under Section 12AB, that is Charitable Trust Registration. CIT refused or took adverse view, details in order. So issue was whether the foundation is eligible for registration under Section 12AB and on what basis the order should be considered. Let's see what tribunal observed and held. Registration matters require what? Examination of objects, activities, genuineness, and compliance. Procedural fairness and adherence to the statutory criteria for registration are what? Crucial. Tribunal likely directed a reconsideration or granted relief based on merits of eligibility and procedural aspects. So outcome was trust appeal allowed, registration concerns addressed in favor of charitable entity. And now we are moving to High Court. Principal CIT versus Colo Colour Pvt Limited. Relevant assessment is 2011-12. Bombay High Court. Date of order is 16th September 2025. Relevant section is section 271, subsection 1, clause C. Let's understand facts and issue of the case. Assessee carried on photo studio and trading business, filed return declaring modest income. Reassessment under Section 147 made addition on alleged bogus purchases based on sales tax info, rejecting books under Section 145, subsection 3. Assessing officer also levied what? Penalty under Section 271, subsection 1, clause C for concealment or furnishing inaccurate particulars. Assessee didn't appeal the assessment and agreed to additions to avoid what? Litigation. So issue was whether penalty under section 271 subsection 1 clause C can be levied when the income addition was only on ad hoc estimation without positive finding of concealment or inaccurate particulars. Let's see what Bombay High Court observed and held. Penalty proceedings are what? Distinct from assessment proceedings. It is not the same. Penalty proceedings are distinct from the assessment proceedings. When additions are based on estimation without the conclusive evidence of concealment or inaccurate particulars, penalty cannot be sustained. Rejection of books and ad hoc profit estimation alone do not constitute what? Furnishing of inaccurate particulars. Penalty under section 271 subsection 1 clause C not leviable where addition was based on ad hoc estimate and no clear finding of concealment or inaccurate particulars. Confirm the CIT appeals tribunal deletion of penalty and dismissed revenue appeal. UP Rajya Nirman Sahakari Sangh Limited versus Union of India. Relevant assessment areas 2009-10 to 2012-13 and 15-16. Allahabad High Court. Date of order is 8 October 2025. Let's understand facts and issue of the case. Cooperative society claimed refunds or credit for TDS amounts not reflected in Form 26A. Very, very interesting. So department withheld or refused refund citing absence in Form 26A. Assessee produced Form 16A certificates. Issue was whether the assessing officer can deny refund of genuine TDS credit solely because the TDS was not reflected in Form 26A. Very much interesting. Let's see what Allahabad High Court observed and held. Mere absence of TDS in Form 26A is not a sufficient ground to deny credit or refund if assessee produces valid TDS documentary evidence. For example, Form 16A. Very much interesting and important is that the Form 26A is not a final verdict. Okay, we can defend if we have a proper Form 16A received from our deductor. So mere absence of TDS in Form 26A is not a sufficient ground to deny the credit or refund. Responsibility lies on assessing officer to verify and accept taxpayers' evidence rather than hide behind Form 26A's mismatch. Taxpayer should not be at mercy of the officer who delays acknowledgement of genuine refunds. Court allowed a wait, holding that refund or credit of TDS must be allowed after verification of Form 16A certificates despite mismatch in Form 26A. directed the proper action by AO to grant legitimate refund. Very, very much interesting. Next, Balaji Landmarks LLP versus CBDT. Relevant assessment year is 2018-19. Delhi High Court. Date of order is 14th October 2025. Relevant section is section 80. Read with section 119, 139 and 153. Let's see facts and issue of the case. Assessee LLP filed return for assessment year 18-19 belatedly on 30th March 2019 after the due date, but within extended period under section 139 subsection 4. So loss return delay prevented what? Carry forward of losses or deductions. Application under 119 section 119 subsection 2 clause B for condonation of delays was rejected by the CBDT. So issue was whether delay in filing return due to time taken to obtain legal advice on complex tax issues constitutes a valid reasonable cause and genuine hardship warranting the condonation under section 119 subsection 2 clause B. Let's see what Delhi High Court observed and held. Delay was due to bona fide reliance on professional or legal advice, not lack of diligence. Non-condonation would cause what? Genuine hardship by disallowing carry forward of loss, significant adverse impact on assessee. Section 153 clause 1B allows what? Extended assessment period protecting the revenue interest if delay is condoned. Held that condonation of delay is justified as genuine hardship and reasonable cost existed. Directed that the return filed on 30th March 19 be treated as filed in time and assessment be completed under section 153 clause 1B. Very much interesting. Today we have discussed very much interesting decisions. Manjit Singh Chawla versus Deputy CIT TDS. Relevant assessment year is 2024-25. Karnataka High Court and date of order is 2nd June 2025. Relevant sections are section 5, section 17, subsection 2, section 45, 48 and section 197. Let's understand facts and issue of the case. Assessee employee of Flipkart received what? One-time compensation for diminution in value of the unexercised stock option plans, that is ESOPs, applied for nil TDS certificate under section 197. Assessing officer rejected treating payment as perquisite chargeable as income. Very interesting this is also. So issue was whether the one-time voluntary compensation for loss in value of unexercised ESOPs is taxable as a salary perquisite under section 17 subsection 2 or capital received not chargeable to tax under the act also affecting TDS applicability under section 197. Let's see what Karnataka High Court observed and held. Compensation for diminution in value is not a perquisite under section 17 subsection 2 where no shares are allotted or exercised. Very much important. What Karnataka High Court observed is that compensation for diminution in value is not perquisite under section 17 subsection 2 where no shares are allotted or exercised. ESOPs may be capital assets, but absent exercise or realization, cost of acquisition cannot be determined and section 45 cannot apply, hence no capital gains. Without chargeability under any head, payment is a capital receipt, not chargeable and no subject to TDS. Means it is not chargeable anywhere else. So without chargeability under any head, payment is what? Capital receipt and therefore no subject to TDS. Quest rejection of application under section 197, directed issuance of nil TDS certificate, confirm that one-time voluntary compensation for ESOP value diminution is not taxable under the Act and not subject to TDS. And now we are at the end of the video and now we will see one-liner conclusions that can be drawn from today's cases. So let's see one by one. If you want, you can take a screenshot of it. Where TDS is deducted and deposited in the assessee's PAN due to deductor's error, full credit of TDS must be granted to the assessee, notwithstanding proportionate ownership of income subject to verification. Subsequent expansion of municipal limits after the relevant notification date is irrelevant for determining whether land is a capital asset under section 2 subsection 14. Post amendment to section 251 subsection 1 clause A, the CIT appeals has no jurisdiction to remand matters to the assessing officer for fresh verification where the order appealed against is not passed under section 144. Mere presence of religious worded objects in the trust deed is insufficient to deny Section 80G approval unless actual expenditure on religious activities exceeds the statutory limit. Registration under Section 12AB cannot be denied without proper examination of the genuineness of activities and compliance with statutory conditions, and the matter requires what fresh consideration on merits. Penalty under section 271 subsection 1 clause C cannot be levied where income addition is based merely on ad hoc estimation without any clear finding of concealment or furnishing of inaccurate particulars. TDS credit or refund, very important, cannot be denied solely due to non-reflection in Form 26S when the assessee produces what valid Form 16A and the assessing officer fails to verify the same. Delay in filing a return caused by bona fide reliance on professional advice constitutes what genuine hardship, warranting condonation under section 119 subsection 2 clause B to allow carry forward of losses. One-time compensation for diminution in value of unexercised ESOPs is a capital receipt, not a repetitive nature, not chargeable to tax and hence not liable to TDS, justifying issuance of a nil deduction certificate under section 197. That's it for today. Thank you so much for patient hearing. Please note down my contact numbers, and if you have any observation, queries, any suggestions, then do let me know via email, via WhatsApp, or you can also comment below this video. So stay tuned to the Tax Guru YouTube channel for latest updates and video series like this. And I'm going to start a new video series from January onwards on concurrent audit of bank branches. So stay tuned. Till then, bye bye. Take care. Hare Krishna.